Hey guys, happy Halloween. Hope you had a great week. And nice to be back. I was sick for a couple of weeks and on vacation. So yeah, we'll dive right into it. Obviously, don't want to waste your guys' time at all. Starting off with PayPal. So PayPal's gotten pretty beat up the last couple of weeks. I'm not sure if you guys noticed, but it's down about 16% from the recent highs, roughly. So back, if I zoom in on the chart, the 1 month chart, right over here, we were trading at roughly 273, and Bloomberg broke an article that's our news that PayPal was going to be acquiring Pinterest. Obviously, the market did not react favorably to this, so it sold off heavily, right down to 240 or so last Friday, 2 Fridays ago. And then on Monday morning, PayPal came out and pretty much said that they're not going to be acquiring Pinterest at this time. Stock price gapped up 255. Sold off all day. I'll actually zoom in so you can see the candles instead, right? So you can see we gapped up and then sold off all day, recovered a bit, sold off again, sold off all week to new lower lows, right? Now we're at 232.75 as of Friday. So essentially, if you look at this, PayPal is on a deep discount, and they are a blue chip tech stock that pretty much runs the internet, right, for e-commerce, because a lot of sites use them. And if you look at the 1 year chart, which I had up earlier, you can see that we're at very heavy support right now. So basically, if you look at the 1 year chart, back to December of last year, we've only spent about like 4 days below the current price, which means that the stock is pretty cheap, right? Average analyst price targets on it around 320 per share. Not that analyst estimates matter that much, but that being said, they're actually doing more revenue than Visa right now, which is kind of crazy to think about, right? PayPal, which is a newer company, is doing more revenue than Visa, the credit card merchant, right? And they're obviously very profitable as well, great balance sheet, killer revenue growth as well. And so whenever we see a sell-off like this, over the past year, we've seen some sharp sell-offs. We usually see a sharp recovery, even if it's a short-lived recovery, right? So for example, we fell 19% back from the all-time high previously at 309 or so on February 16th, hit a low of 251 on the 25th. So in about 9 days, we dropped 19%. And then what happened? Recovered 10% before dropping again, right? Dropped down 19% from the then 277.50 to a low of 223.09. And within 4 days, we recovered back up to 255. So PayPal reports earnings not this week, but the following week on Monday, right? And Square, which is one of their competitors, they report on Thursday. So that report should have sympathy written all over it for PayPal. If Square reports a blowout quarter, chances are you're going to see PayPal pop in sympathy with them as well. I doubt very much we're going to see PayPal stay at these depressed levels into the ER, because it just seems like easy fodder for cash secured put sellers right now. If for example, you want to own the stock, PayPal, that is 100 shares, you sell CSPs, cash secured puts, around 220 right now. And basically, if you're assigned, you're owning it at the lowest price over the last 11 months or so, right? Which is pretty damn good. And obviously you need to hold it for a few months, or maybe even long term if you want to see a nice profit. But again, PayPal is here to stay. They are actually doing, I was reading that they're doing more transaction volume on cryptocurrencies than Coinbase is, which is pretty insane. So kind of a fun fact to note as well. Either way, we'll look at some strategies on how to play this, depending on your risk aversion levels. If you want to be risk averse, there are strategies to use. If you want to be more risk tolerant, I guess, there are other strategies to use as well, right? So just looking right now at the option chain. So for PayPal right now, IV is 36%, roughly around the historical. So not too high right now, not low either, right? If you're going to go out to this coming Friday, we're pricing in currently a move of about $9 in one direction from the current price. So upside roughly, let's call it 242-ish, downside roughly 222-ish, right? Which is the low we saw from December of last year, right? So earnings are next week. Obviously, the expected move is much higher for the ER week, right? Because we're expecting a larger move. So as you can see, expected move is about $17 in one direction from the current price. So that puts us at roughly 250 upside. On the downside, roughly 217 or so, right? If you want to own the stock at 220, you can simply sell a cash secured put 2 weeks out, 12 days out, 220 strike, getting about $3 and change in premium, which means that you're okay with owning the stock at 216 and change, which again is the lowest price it's traded at in the last 11 months or so, right? If you want to mitigate your risk a bit and maybe lower your margin impact, you can make a spread out of that. You can simply sell the 220 if you want, for example, and then buy the 200. That creates a $20 wide credit put spread. In this case, it's called a bull put spread because you're bullish, right? The credit received is about 250, 260 or so, meaning you're going to own the stock in a worst case scenario at roughly $217.40 or so, right? Again, lowest price in the last 11 months. Your maximum loss in the trade would be 2,000 because you're 20 wide times 100 minus your credit receipt of 260, so $17.40 maximum loss. But obviously, you don't look at it that way. You look at it as I want to own PayPal stock below 220 or so by expiration, right? So that's a way of looking at trading PayPal on the put side. If you want to get more premium and maybe get more time on it as well, if you're perhaps bearish on the market, alternatively, you could go with January. The only problem with going out more than a month or so on CSPs is that the time decay isn't very rapid. You won't see much bleed in time decay. You will see IV contraction after the ER event. But even, for example, if you sold the 220s for, let's say, $9, for example, which means that you're okay with buying the stock at 220 minus 9, which is 211. In that case, your Vega here is 0.408. Let's say IV pulled back 6%, right? That's only 6 times 0.408, which is about 320. So you're only to see, a gain of about $3.20 here off the hop in the next couple of weeks, right? Again, assuming it doesn't go down to 220 or below, right? So again, probably the better play to do is go short term with cash secured puts, assuming you want to own the stock at the current level. That being said, you can also scale in, buy some at 220, buy some at 200, buy some at 180. But again, this is a blue chip company. PayPal is probably doing very, very well. And this quarter should probably see reflect that as well, in that a lot of merchants online are using PayPal as their primary vendor to sell goods, right? I use PayPal a lot for everything that I do, essentially, right? So I know how much money they make off of me. That being said, let's say that you're bullish and set on PayPal, right? Again, they don't pay a dividend. Let's say you want to go longer term, right? Leaps are a great way to capture this possible longer term move up to 350, $400 for the next year or so, right? So looking at leaps, for example, you could buy the $200 strike contracts 1 year out for about $53 or so per contract. Break even is 253, which is where we were at last on Monday, actually, 255. And yes, you're paying $5,000 per contract, but essentially you're buying the equivalent of 73 shares because of 0.73 delta, using a deep in the money call option that expires a year from now. And really your risk isn't that high, because if you do pull back to like 200, for example, then your contract would be worth roughly $35, in which case you can average down, assuming you want to average down. It's just a better way of trading, being more capital efficient than buying the stock itself. Because buy 100 shares of stock, you're spending, $23,000 or so, right? If you spend 5,000 and change instead, you still have, 4 shots to average down if you wanted to use the same amount of capital with options that you would use with 100 shares of stock instead. And keep in mind, this is a year out, right? So the probability of PayPal falling, for the next year and not recovering in the next year is not very high. Again, in my opinion, obviously, but I could be wrong, but that's my opinion right there, right? Shorter term trades, again, for the more risk tolerant, if you want to take a bigger stab at a move in the short term, there are some good trades to be had as well, right? So looking out again to a couple weeks out after the earning event, you could go with, for example, the 240 call options long and the 260 call options short if you wanted to. Debit is about $4. Break even is 244. Maximum profit is $20 minus 4, which is 16. You have 4-to-1 risk reward here. Maximum profit realized above 260 per share by November 19th, right? So that's a nice risk reward play right there if you wanted to, be more risk tolerant and chase the upside in the short term. If you want to be less risk tolerant again and capture upside, obviously you can just trade short-term call options that are in the money or at the money. And if we recover back up to 255, 260-ish, which I think will happen in the next month or so, probably the next couple of weeks actually, that would be a nice play as well, right? So for example, if you wanted to go with 230 call options, which are currently $13 per contract, break even 243, and then you pop up to 260, for example, you just made yourself 17 bucks per contract, right? But again, you see why the spreads are more powerful in this case, because the break even is roughly the same on the 240, 260 call spread for November 19th. You have less time, yes, that is true, but you have 4-to-1 risk reward, right? Nice asymmetry of risk there, right? That's a good way of playing it, possibly, if you wanted to be, I guess, more risk tolerant in this case, right? Just some food for thought. PayPal, I think, is a great long-term play, and I think I'll be trading above 250 to 260 in no time again, possibly this week on Square's ER, right? So speaking of Square, we'll just dive into that for a sec as well, right? So Square, they're at 255 as well. They've had a little bit of a pullback the past few days, nothing crazy overall. They've outperformed PayPal pretty well, but you can see that they were at 270 on Tuesday and they closed at 255 on Friday. So still a pretty nice pullback, a very volatile stock, right? It swings pretty wildly. Back to the option chain again. So for the coming week, which factors in earnings because they report on Thursday, current expected move is about $18 in one direction from the current price. So that puts it right around 273 upside, downside of 227 or so, right? And obviously the IV is very high right now, 44.6%, historical 38.8%. So you're paying a lot of premium right now if you're buying contracts. I would not buy the Friday contracts, obviously, because I don't like playing earnings, but what might not be a bad idea is if you're playing PayPal in sympathy with Square, you own PayPal before the event of Square's earning report. If they beat, then PayPal should pop with Square, right? If they don't beat, PayPal may not fall as much as Square does, because obviously it's already pretty heavily beat up. And it's possible Square falls and PayPal stays flat. In that case, you might get a nicer entry into Square after the earning event, right? So just some food for thought there as well. But again, IV is very high right now, so selling premium might be a decent idea if you're doing cash secured puts, a month and a half out, perhaps to December. If you want to own Square stock at a much lower price, let's say, for example, 220 or 200. There's heavy support, I believe, at 200, if I'm not mistaken. I traded it this year a few times, and here's the chart. So again, support very heavy around 200. If you draw a line across here, you can see that we've bounced off this area very, very abruptly numerous times, right? So here's the line right here, right around 200. Let me just fix this one sec. There we go. You can see we've only spent pretty much basically 3 days in the last roughly year below 200, right? Each time we hit 200, what happened, right? Well, over here, high of 215, hit 200, 195 low on December 2nd. Over the next month, bounced to 241, right? 20% gain in basically a month. What happened next? We fell down to 197.70 on January 27th. Again, next month, we're at 274. So a massive, 30+% gain in a span, almost 40% gain in the span of basically a month, right? And what happened? Fell back down again, hit a low of 191. What happened? Within a week and a half, we're at 252, right? So you can see where I'm going with this, right? Very volatile. If we do see downside to 200, nice bounce, which is why I mentioned the CSPs at 200 strike price, right?
Biden really shit himself.
Where was that? Never mind. You're on mute right now. So anyways, yeah, so back to Square. CSPs aren't a bad way to play it at 200. Obviously not a lot of premium right there, but you could use put spreads if you wanted to for credit to mitigate your risk on the downside over the next 47 days or so. But yeah, that would be a decent play on Square. So otherwise for earnings as well, this week we have for ER, we also have reporting. We have tomorrow after hours NXP, and then on Actually, we also have Avis Budget Group as well, which is ticker symbol CAR, right? They've had a massive run the past month or so, right? They're up about 70% or so in the last month, which is insane. Like you can see this chart over here, right? Since late September, they were pretty much at 93 bucks, 173 right now. Massive run, right? They report tomorrow after market close. We also have on Tuesday morning, Corsair, ticker symbol CRSR. They're pretty heavily beat up. They've been kind of puttering around for the last little while. See the 1 year chart over here. They had a high of 52 bucks or so back in November last year. Since then, been in a downtrend. At some point, they should break out of that trend and push back above 30. I'm not sure if it'll happen this week, but it could happen at any time. Again, undervalued or so. Also reporting Tuesday, AMC, one of the meme stocks, Activision Blizzard After Hours, ATVI. There is Zillow as well, ticker symbol Z. There's T-Mobile, Amgen, AMGN. And then on Wednesday, we have CVS in the morning. We have Norwegian Cruise Lines in the morning as well before market open. After close, we have Roku, Qualcomm, Skills, and Fastly, as well as Etsy. And then we have on Thursday, Moderna in the morning, first thing before market open, Viacom CBS. We have Regeneron as well, Datadog, DDOG. And then after hours, we have Square, Pinterest, Uber, Airbnb, Mercado Libre, Peloton, Cloudflare, and Fortinet as well, right? So a lot of big growth names reporting on Thursday after close. Already went over Square, Pinterest. You guys can look at, obviously, they popped on news that PayPal may be acquiring them and then fell back down after they debunked that. But again, PayPal, I think, is the best play right now that I see for the larger cap stocks, the mega caps, if you will, actually, because it reminds me a lot of what happened with Costco a few years back when Costco fell on news that Amazon was buying Whole Foods, right? So when Amazon bought Whole Foods, Costco fell. Where was it? It was somewhere over here. Yeah, it was over here. So Costco fell from 181 down to about 150 on news that Amazon was buying Whole Foods. Everyone thought that, oh my God, all of a sudden Amazon would dominate the grocery space and Costco was doomed, right? Well, what happened? People that bought that dip in July, by December, it was at 190 again, right? So a nice recovery. And obviously look at it right now, it's at 500 bucks a share almost, right? So these dips are rare, especially when they're driven by news that's irrelevant to the company's actual fundamental performance, right? Like what's changed with PayPal in the last 2 weeks? Nothing whatsoever. The only thing that's changed is the value of the company is about 18% less than it was 2 weeks ago, which means that's a great deal for those that are savvy investors, that are patient investors, that want to own a blue chip fintech stock in their portfolio, right? So just some food for thought as well. I'm also looking at Disney as well. They report next week, and they have fallen as well to support, which is around the 170 area. I'll pull up the 1 year chart so you guys can see the 1 year chart better, right? Again, pretty heavy support at around 170. It has broken through once back in, I think it was February, somewhere over here, right? It was back in January, late January, broke below down to 160. But what happened within a day was at 173 again, right? So whenever we hit this level of 169 or so, 170, it bounces usually to 175 pretty fast. They report earnings next week. I believe it's the 11th, if I'm not mistaken. And again, this might not be a bad deal as well. I won't go over strategies. You can use the same strategies as PayPal on Disney as well, right? Cash secured puts if you want to own at a lower price. If you want to play calls, if IV's high, use call spreads. I would not trade the earning event. Maybe wait till after the earning event. If it falls after that event, might not be a bad trade to get into it for a longer term kind of swing, right? I also love CRISPR, right? CRSP, right? They have been beat up pretty heavily. Basically, you're buying a stock that's had a lot of development internally, fundamentally, at the same price they were trading at about a year ago, right? So looking at this right now, again, this is one of the gene editing stocks, CRISPR, Beam Therapeutics, Editas, and Intellia. They're the four primary gene editing stocks that focus on CRISPR technologies, which are going to change the way we view medicine going forward, in my opinion. Again, if you want more information on this, watch a video on it or read The Code Breaker by Walter Isaacson. Great read. It'll give you a lot of information on gene editing and the future of genomics, right? But I do think that CRISPR is undervalued at the current price. They're right now worth, let me pull up the valuation on them because give you guys some numbers just to look at for perspective, right? Current valuation, 7.16 billion. They currently have about $3 billion in cash, meaning that they have almost half their stock price in cash right now, right? So the floor should be somewhere around 50 bucks in a worst case event. The market were to crash hard, right? The average price target right now by analysts, again, not that it means a lot, but just to say it, is 159.05 per share. So about 60% above the current price, roughly, or 65% above the current price, right? Massive upside. And basically right now, you can own the stock for the same price it was trading at last year. Not to mention they've already had so many developments in the last year, right? This is a very golden opportunity that I see right now in the market. Obviously, it might take some time to come to fruition, but I do think in due course we'll see CRISPR trading at $500 to $2,000 per share in 5 to 10 years, because they're right now very cheaply valued, and the solutions they're working on are very, very economically beneficial to them as a company, and also very useful to society as a whole, right? Do some more research, obviously. I've done my own DD. You should do yours as well. Don't take my word for it. Do your own research and manage your money based on your own risk tolerance. And obviously manage your own risk. Don't go all in on one play, because that could blow up as well, right? That being said, I do think that this is one of those stocks that could be a millionaire maker in the future. Got to be patient, obviously, and dollar cost average if it falls down from your entry price. I know some guys that are in like 120-ish and they're averaging over here, right? I like it right here. If it falls down to 85 or 80 bucks, I'll sell some cash secured puts and I'll own some more of it, right? Great company. I think they're the most financially sound of the gene editing stocks right now. And I think they're actually the cheapest based on the current valuation, right? Yeah, and Intelli is obviously a great choice as well. And TLA, put that up over here. They're still trading pretty high. They haven't filled the gap yet, but again, they're doing very well as well. Edit over here, Editus, they're down at 37. They were at a high of 100 this year almost, right? And then you have Beam Therapeutics, BAM as well, right? So 88.77 as well. So some food for thought, obviously, guys. I think that's pretty much it that I'm looking at right now. So again, PayPal, just to recap, PayPal is my highest conviction stock right now for tech, for big tech. And then Disney, obviously, for stable companies. But again, they report next week, so I'll wait till see what happens with them before I make a move. Then you have gene editing, primarily CRISPR, CRSP, right? So PayPal, Disney, and CRISPR are the ones I'm looking at right now that I think are currently undervalued. Obviously, again, I'm going to say it again: do your own DD, manage your risk very well, and yeah. If you have any questions or comments, drop them below, guys. Appreciate your time watching, and we'll break off into some Q&A right now for the private group. But yeah, have a great week, and I will see you guys next week.